Well, the first thing they should do is not ignore the letter. The IRS wins about 93% of all audits that they do. The reason is because over 67% of all audits go unanswered. A lot of people may owe money because they never answered an audit, and the IRS could have been like, hey, send us a copy of your charitable contributions for this year. Well, if you don't respond because you didn't open the mail, then you're of course going to lose. So number one, open the mail and respond. Don't think that every letter that you get from the IRS is going to be a terrible thing.
You're listening to the Rich State of Mind Show, the podcast made to make you the total package in the entrepreneurial world and give you what we call a rich state of mind. If you are here looking to learn about real estate investing, marketing, elevating your business, and developing your mindset to get to the next level, then you are at the right place. Stay tuned and be sure to join our community on richstateofmind.com. Now here's your host, Anthony Ritchie.
Hey everybody, welcome to another episode of Rich State of Mind, where I'm talking to Ben Goldman. He's the CEO and founder of Irs Trouble Solvers. This is an organization helping individuals and businesses with wage garnishments, tax liens, delinquent tax returns, advisory bankruptcy services, and more. Ben is passionate about helping people that find themselves in scary situations where they're owing the IRS money to help them find peace, protection, and prosperity. So please welcome Ben to the show. This is a topic that should have had months ago. So I'm glad that we're finally able to talk about this topic. As always, please enjoy and thank you for listening. Hey, Ben, thank you so much for you taking your time this evening on this Monday. I really appreciate you because we're going to be talking about taxes, IRS, something we haven't talked about in about 80 episodes, but specifically tax resolutions and how to deal with the IRS and where you come into play with that. So if you could please just tell us a little bit about yourself and what you do.
Yeah, thank you so much for having me today. I really appreciate it. So, we help people with tax problems, and that's our main focus. So, we help people owing the IRS $20,000 all the way up to, you name it. I think one of our largest clients right now owes the IRS over $5 million in payroll taxes. So, the key is we want to look to see what you have going on in your fact and circumstance to see if we can help you. We just don't want the IRS to say this is your only option. We want to be able to give you the option that will best suit your needs. And a lot of people don't know that the IRS, that you have options. So that's what our goal is for our clients. And, everything for us is customized based off of their fact pattern and circumstances. So, everybody gets the red carpet treatment.
Awesome. So how did you get started in something like this, man?
Yeah, so I was bullied by the IRS when I was a new practitioner. So an IRS agent came to me and said, Ben, you have to pay not only the taxes that your client owes, but you also have to pay their penalties and interest as well. And I was like, well, that's my client. That's not even me. That's not even my company. And they said, well, you're responsible. And so they did some research into me and they said that I was responsible, but I wasn't. And they did not do all of the due diligence. And, I stayed up all night long trying to figure out how to get around this. And I found where they made a procedural mistake. And when she made a procedural mistake, I was able to capitalize on that fact. And then I was able to show where the IRS invaded my privacy. And ultimately, long story short, she was not allowed to force me to pay the client debt. And she was also barred from working any of my cases from that point moving forward.
Oh, wow.
Yeah. So, the key for me is since they tried to force me into paying that $171,000 into the IRS from my client, it's scary. It was really scary for me because I was a new business owner, new practitioner. And I was like, the lady's like, this is how much money you have in retirement. This is how much money you have in this bank account. This is how many vehicles you own. This is how much money you have here. And it really scared me because I didn't know the IRS, I didn't know they could know or find out all that stuff. Well, I knew after that phone call for sure. And I was like, oh my gosh, if they do that to me as a professional, what are they doing to, everybody else out there that doesn't know how to look up these, I wouldn't say secretive, but these procedures that nobody knows how to go and look for unless you have an IRS procedure book.
And I was just about to ask, where did you find something like this? Where did you
Have a master's in tax, and as soon as she started talking to me about what I was going to have to pay taxes on, I looked up the Internal Revenue Manual, and I went into the Internal Revenue Manual and just dug in really hard. The Internal Revenue Manual it's a book that tells the IRS what procedures they can follow and what procedures they cannot follow. And that's where I found her mistake. So it was actually her rule book that she didn't follow.
And I'm glad that you were able to fight for yourself, and so many others that probably wish they knew just where to look. So something similar in my job, where we always say you don't have to know everything, you just have to know where to look. And so it's good that you was able to reference something like that. So for anybody else, if they're getting letters from the IRS, so what is the first thing that they should do?
Well, the first thing they should do is not ignore the letter. The IRS wins about 93% of all audits that they do. The reason is because over 67% of all audits go unanswered. So a lot of people may owe money because they never answered an audit, and the IRS could have been like, hey, send us a copy of your charitable contributions for this year. Well, if you don't respond because you didn't open the mail, then you're of course going to lose. So number one, open the mail and respond. Don't think that every letter that you get from the IRS is going to be a terrible thing. The IRS has sent out a lot of money the past several years through stimulus checks and things of that nature. So, a lot of people also miss those because they didn't file. So file your taxes. And if you get a letter, don't be afraid to open it and don't be afraid to respond.
You mentioned earlier about one of your clients owing $5 million in payroll taxes. How is that so? How does that work when you have employees?
Yeah, so it's an unfortunate incident. The company made a business decision that they were not going to pay the taxes on the employees. And because they did that, now the company owes the payroll taxes to the IRS that never were remitted back to the IRS over a several year period. So for example, when an employer pays you, they take the taxes out. Well, that part was never paid to the IRS, as well as the part of the match that the employer has to pay, as well as the penalties and interest. And that's why it continues to grow and grow and grow. And
can't you pay something like that quarterly?
You should be paying it every time the payroll is ran, not quarterly.
Okay.
Every single time you run payroll.
And you can make a submission. Okay.
Yeah, when you pay your employees, that's when the taxes should be paid, because that's when you have the money. Cash is king, and if you have it in your account, you'll never get in trouble if you actually pay the taxes. They were making the decision, well, I need to pay my vendors, I need to pay the light bill, I need to pay the rent and things like that, instead of paying Uncle Sam. So they're in a heap of mess because it's going to be difficult for them. It's a lot of money.
I wonder what type of tight situation their CPA was in to be like, hey guys, like we need to be putting money aside here.
Well, they didn't use a CPA. That's the problem. They tried to do it all themselves. There's so many different tax programs out there that you can do on your own. You use your own. People file their tax returns on their own, and they don't use a CPA. They don't use an expert. And the problem is they just answer the questions. The software is set up so that they ask questions as you go through, sort of like an interview. And when you go and answer the interview questions, I looked at a certain tax return. I'm not going to name any names, but they filed the tax return with a company online, and it asked about their mileage. And as it ends up, when I looked at the tax return, they had entered the mileage for the same vehicle and the same miles in 4 different places and took the deduction 4 times, and they were audited, and they were like, well, it just kept asking me questions, and I just put the same amount of information in, and I didn't know. And well, the software in that instance, it really did not help the client, and that was a big problem for them. And ultimately, we were able to help them save some money on penalties and then get a payment plan set up for them. But in that instance, we're pretty much dead in the water for the IRS because they made a mistake. I mean, at the end of the day, what is our goal? Our goal is to file an accurate and complete tax return. And sometimes when the IRS audits you, if it's not accurate and complete and there was a mistake, a true mistake, you may owe some money. So, that's where we come in and say, okay, well, yeah, we still owe the money, but do we have to pay these penalties? Yes or no? And there are ways for us to go in and try to get those penalties removed.
So you definitely recommend a human CPA over a company using a software?
Well, it depends. If you have one W-2 and you don't itemize, I mean, you can use the software definitely. But if you have 4 rental properties and you own a business and you also do some multi-level marketing systems or whatever it is that you have, I mean, the more complex the return is, the more you need to seek professional help. Because, I mean, what happens if there's some loopholes or some strategies or something like that you could use that you don't know about that the CPA does or the professional knows about?
Gotcha. Okay. No, and I'm glad you bring that up, because I know some people are like, hey, maybe I only got 1 employee and I could probably figure it out, versus if I got 3 or 4 different people, plus I had those side businesses, then yeah, it would be helpful. The hard part is, I've noticed for some people, is identifying when it's time to kind of scale to having, maybe a CFO, a CPA, a bookkeeper or assistant. So I just try to help people identify when's the best time to do something like that.
My advice there is don't play with payroll at all. Get a company to help you with it that does it for a living. I have a company that does my payroll. I could do my payroll if I want to. I know how to. I could do it without a problem, but I pay someone else to do it because at the end of the day, I have employees in 7 different states. I don't want to make a mistake. So, I mean, we run a business where we have 53% of our employees remote based instead of here in office. So because of that, I don't want to have to deal with the headache and hassle of all of the different state regulations, as well as, if a mistake is made, they're going to help us out with it, and I don't have to worry about it.
Okay, gotcha. Completely understand. So, let's say like your client and other people that owe all this money, can the IRS do any disciplinary action on you outside of everybody knows that, you can go to jail for the, I've heard of, can they take your passport, maybe suspend your license? What are the in-between notices you get before you go to jail?
Yeah, absolutely. So, there's a lot of advance warning that the IRS gives you through notices to say, hey, listen, there's an issue. We have an issue. And the way I word it is like this: how much does the IRS say that you owe? Because you may not owe that. I mean, there's a lot of identity theft and things like that that's going on these days, a lot of scam artists and whatnot. So how much does the IRS say that you owe? Number one. Number two, is it yours? Can you pay it? Do you owe it, or can you pay it? Those are the 2 big questions. So it matters if you owe it and you can't pay it, or if you don't owe it. Those are 2 big different questions. But the IRS is going to send you notice after notice after notice, and you have to be just about, you just about have to have your head in the sand to not respond. They will not levy a bank account, or they will not, put a lien on you without multiple advance warnings.
Okay, so you can also have a lien on yourself. So like maybe like a lien on your house,
or on any of your property. The IRS puts the lien at the county level. So legally, if you sell anything inside the county, that lien is supposed to be upheld. Now, a lien isn't upheld on an automobile unless it's with the DMV, right? So
Mhm.
there are some things that go beyond the scope of that lien. For all intents and purposes, when you go to sell that house and there is an IRS lien on it, nobody's going to purchase it, or nobody's going to really allow you to sell that home because of that public record. Now, in 2018, the IRS stopped reporting liens to credit,
Okay.
but it's still public record. So, if you were to go sell a home or buy a home or something like that, they're going to pull your public records to see how much money, or are there any liens out there. And that's when you run into problems,
Can I do a payment plan to uplift the lien? Let's say I come to an agreement with the IRS. Hey, I'll do this payment plan, uplift the lien so that I can sell this property. Is that possible?
It is possible. However, there's different ways to go around it, and how much money you owe is a huge factor. If the
Okay.
lien can be lifted, or if the lien is paid in full, or if the lien is not paid in full, will the IRS still allow you to sell the property to pay your IRS debt? And when you get into those issues, it becomes very complex. There's only a few different campuses that the IRS has that will allow you to do the lien work and lift the lien, or get it released or something like that. And it depends on really how much you owe. So, if you owe less than $25,000 and you're on a payment plan, yes, we can get the lien lifted pretty much automatically. But if you owe more than $25,000, there's more steps involved. And honestly, the IRS is not really going to lift their lien easily, because that is the right of the government to protect their interest.
Understandable, but it at least gives some people like, hey, it's not. When we think of the IRS, we think of kind of like the guillotine, like not somebody, an entity that we can kind of work with, somebody that could be negotiated with. So it's good that there's some options if somebody's in that type of bind.
There really are options. The problem is right now, the IRS is understaffed and overburdened because of COVID. They were not able to staff properly. The smaller the companies, they were able to just hey, you can work at home. Here's a laptop, and just log in. The problem with the IRS is their firewalls were so complex that a lot of their employees could not log in without special consideration. And the IRS sort of got caught because they didn't have a lot of the laptops available, or the special consideration codes to go through the firewall and things of that nature. That way, the auditors or the revenue officers could not do their job effectively. The other problem is, the IRS budget has been cut for the past 20 years. So, the staffing of the IRS went from 114,000 employees down to 72,000 employees in 20 years. And so the budget is getting cut every single year. And it doesn't matter who's in office or what all is going on, that the IRS is getting cut,
That's so interesting. I didn't know they had that many. I thought it was maybe 100 cubicles, and that was about it.
They're trying to hire another 87,000 employees over the next 10 years. And as a matter of fact, the statistics say that only 24% of the phone calls actually get through to the IRS. And that's after an hour or two wait.
And that's because it hasn't always been like this, because of COVID.
It's been getting worse, but a lot of it has to do with COVID. A lot of it has to do with them being understaffed. One of the reports said that they can't really give competitive wages. They've got great benefits, but competitive wages are a problem right now with the way the market is.
Yeah.
I think that the economy is going through a really tough time right now, because a lot of people are saying, well, I want to work from home, or they have more of an option to work different places. And, the whole mantra of working for the IRS is still there,
Yeah, this is true. And so, all right, so let's just say I don't have the money. I owe $1 million. and I can't afford to pay. What's my options?
So there's several different things, and it depends on how much money you make and do you have assets. Okay, so there's different strategies that we can use. If you don't have assets, and here lately, the past year or two, you're sort of down on your luck. Let's say you made a lot of money back in 15, 16, 17, and 18, well, 19, 20, 21, when COVID hit, yeah, you have been doing poorly. Well, there's strategies that we can use to negotiate with the IRS and say, well, I don't have $1 million to pay you, but I can pay you, $25,000 or whatever the number is. And a lot of people think that it's like going into the IRS and negotiating like a used car salesman. No, no, no. It's a mathematical equation that you have to give the IRS, and the IRS says, well, yes, we agree, or no, we don't agree, and this is why. So there are programs where you can request to pay less and the IRS writes it off. There are programs where the IRS says, well, you don't have to pay us anything right now, but you will later. And there are programs where the IRS says, well, we'll start you out on a lower payment right now, but as you make more money, we're going to be taking more money in the future as well. So there are all those programs out there. The problem is a lot of people, they just don't communicate with the IRS. And honestly, the IRS is there not to help you. The IRS is there to, just ensure that you pay your taxes. They're not there to guarantee you the lowest amount of money. They're not there to, negotiate with you and say, oh, well, if you did this, this, and this, you can pay less. They're not there to do that. They're just saying, these are the rules. You have to follow the rules, and you owe us money. Pay us.
Yeah, the terms you were using almost sounded like you were talking to debt consolidation company. Like, hey, I'll pay 1,000 today if you could, and write the rest off.
There are some strategies out there to do that. It takes about 1.5 years to get through that program.
Oh, wow.
And
Okay.
you have to be very poor. You have to be almost indigent, meaning you have to be almost homeless and penniless to qualify for those programs. And the qualification really is, hey, IRS, I really cannot afford to pay you. And because I can't afford to pay you, here's the proof that you need to write this off, type thing. It's not for everybody. It's, if you have a home, it's probably not going to be for you.
Yeah. What was I thinking about? I was thinking about I've heard a lot of stories of people having to pay their income tax back for several years before they finally get one back as well. Is that how people do people use that as an option as well in your line of work, or they try to still
Absolutely. So let's say that you filed your taxes for the past couple of years, or you did not file your past couple of your taxes. So let's file all those taxes. Let's get compliant. Let's get all those tax returns done, because that's one of the first steps we have to do. The IRS requires it. And then let's say that you start withholding more money out of your paycheck so you don't owe them more. Sort of draw that line in the sand and say, by golly, I'm not going to owe the IRS any more money.
Mm-hmm.
And yeah, they're going to take those refunds from future years to pay the old debt off. And you would also probably have to be on a payment plan as well, unless you qualified for some of the other things that I have been talking about.
Yeah. Sometimes I wonder, because I've been a W-2 worker probably the last 15 years. And I wonder how people outside of entrepreneurs, I wondered how people get into that type of situation. Is it the majority of the regular W-2 people just because they're not filing their taxes? What else? What other scenarios are getting these, regular W-2 people into trouble like this?
Yeah, that's a wonderful question, because a lot of people think, oh, well, all these people are deadbeats, or oh, you don't pay your taxes, they think negatively of them, but it's really not the truth. That's really a misconception, because, I had one client, his wife passed away from cancer, and his life, he just shut down, and he literally did not file his taxes for 7 or 8 years, and he just lived. He did not do anything else. He went to work every day and came home, and that was it. He pretty much went into a cocoon. And it's sad stories like that these people find themselves in, this one gentleman, uh, his son got sick and he took all of his money out of his 401k to pay for his son to get better. And, there's a tax consequence to doing things like that. A divorce is another thing that will just make shambles out of taxes, because one person might be the breadwinner and one person might be the person at home with the children or whatnot, and that could be a big problem for the innocent spouse, that person. So it's a lot of good people that find themselves in really terrible situations, house fires or perils that people go through, find themselves in these situations, a sibling or a mother or father or a child pass away. We have to deal with a lot of sad situations like that. And then we also deal with people that are, they come up and say, well, I just didn't file. I was worried, or I owed money the first year and I didn't know what to do the second and third and fourth year. I just didn't do anything.
Oh, wow.
So, as well as I do that non-action is an action.
Yep.
And there's a consequence. So I tell people it's sort of like this right here. When you drive a car, the windshield is as large as it is for a reason, and the rearview mirror is as small as it is for a reason, because your imminent danger is in front of you. Okay. So let's draw a line in the sand and let's start avoiding the potholes, and let's never have a tax problem moving forward. I'll deal with your rearview mirror. I'll deal with your 6. You focus on what's in front of you. And that's really the goal that we have for everyone that we work with, is let us help you on the back end, and you deal with what tomorrow brings.
I love that analogy. So I'm gonna probably steal that and use that for wisdom to my son.
Yeah, man, take it. I probably stole it from somebody too.
And so we talked a little bit about liens. Is liens and seizing assets the same thing?
No, absolutely not.
Okay, so I want to make sure it's clear.
So a lien, let's talk about a lien, a levy, and a seizure, and let's sort of put those 3 things in definition for us. So a lien is where the government puts a legal documentation against anything that you own. So if you sell it, the IRS can take it. Okay, the proceeds. A levy is when the IRS says, okay, well, you're making $7,000 a month. We're going to garnish your wages. We're going to levy your wages and take $1,000 a month from you to pay your old back taxes. Or we're going to go into your bank account and levy your bank account and suck all the money out of it and levy that account. So that's what they do, is they take all the money out. So a levy is a type of a way that they take the money out of the bank account, or they garnish a wage.
Okay.
Seizure, on the other hand, is something like this right here. Let's say that you're that client that owes $5 million in taxes. Okay, the government says, well, we don't think you're going to stay around. We're going to come in and seize all of your equipment, and we're going to sell all this equipment at auction. And then we're going to take all that money and pay it back to your taxes based off of how we think we should put it, not based off of how you think we should put that money towards your taxes. So that's sort of the difference between a lien, levy, and a seizure.
So first thing I think about being seized, somebody could seize a car, a home. Mm-hmm. Can they seize let's say my 401k?
Absolutely.
Oh,
absolutely. I mean, a lot of people think that a 401k is non-touchable, but not to the IRS. It's sort of like this right here. Think of it like this. The IRS is what I call a super creditor, not predator, creditor. What does that mean? Not only do you owe them, but they have the right to come in and take anything they want to make that debt disappear. Your bank accounts, your assets. Since 1998, the IRS has really taken a step back from, seizing private homes and and personal residences and things like that. But they definitely will take a 401k. I've seen that happen for clients before.
Yeah, that's devastating. Yeah, it's devastating because
well, I mean, you think about it. You got a 58-year-old person that has been working their entire life. They've got, $200,000 saved up in their 401k, and a mistake is made, and the next thing you know, their livelihood could be gone.
exactly. Yeah.
Now, granted, there's a lot of steps between those two places.
Yeah, right. Yeah.
There again, remember what I said earlier, the IRS is not going to just come and start taking your stuff. No. They're going to send you tons and tons of letters. You get a letter, open it up, call a professional, call somebody like us that definitely focuses on resolution. Sort of like this right here. You know what the difference between a general surgeon and a cardiologist is, right?
No.
So a cardiologist is a doctor that focuses only on one organ, right? Their whole life, they study the heart. They think about how it reacts. They think about all the things that you can do to it. They think about all the drugs that can help it. They have special insurance that helps them in surgery or whatever. As a general surgeon, they have to learn a lot more about a lot of different things, and they don't know the very special techniques to use only on the heart, right? So if you were to have a heart problem, would you want to go to a general surgeon or to a cardiologist?
Yeah, cardiologist.
Exactly. So that's sort of the difference between a CPA and a resolution expert, right? So the CPA is going to be able to do a lot of things like financial accounting and financial statements and tax returns and audits and things like that. Whereas a resolution specialist, we only deal with collections from the IRS. We only deal with someone being audited by the IRS. So, the resolution expert should know more about the tricks of the trade. It's sort of like the IRS gives us their playbook. It's my job to know their playbook as good as they know their playbook.
And so it sounds like the CPA is the proactive action, and then the resolution specialist is more reactive if you're in a situation, and especially specific to whatever the case may be.
So we definitely are in a reactive world because everything's already happened.
Yeah,
it's very hard to be proactive and plan for something that's already happened.
gotcha.
So that's really the difference. Absolutely. We don't have a lot of opportunity to do planning unless you come to me and say, hey, I haven't filed my taxes yet. I haven't filed in 6 years. And the IRS they really don't know that I haven't filed my taxes. What should we do? Well, let's put a plan together that's going to be good for you. Are you married? Do you have assets? Can you pay the IRS off? Is there special techniques that we can use to reduce your debt before when we file? But there's multiple ways that look at it from a proactive standpoint in that stance. But yeah, most of this stuff has already happened, and we can only react. That's a great statement, though.
Okay, cool. Yeah. Like I said, as we talk about the different services that you guys provide, scenarios that probably whoever's listening, they either know somebody going through it, that they're going through it themselves, just to have an idea at what point in their life they need to be contacting who, like, hey, okay, maybe I'm in a position where I can still talk to my CPA to make sure I'm on a straight and narrow, or I am, up Poops Creek and I need to talk to a tax resolution expert.
Right.
Where are you based out of, by the way?
So we have 3 locations, one in Seattle, one in Chicago, and our headquarters is in Alabama.
Alabama. Okay. And you're in Alabama?
I am in Alabama.
Gotcha. You a Bama fan?
Thus the Southern accent.
That was pretty on point.
The reason why we're located here is because I have more than one company. So I have a construction company as well. And so we're located here, but there again, remember 53% of our staff is outside the state of Alabama. So, and that's why we do what we do from a national standpoint, is because, IRS is national, but each state, we have a lot of different employees in a lot of different states. And, we want to be able to focus on your situation. So we deal with states. A lot of people don't understand that there are some state amnesty programs as well that are not put out there, sort of, I guess, backdoor.
Mhm.
But you know what the truth is, your friends and family come through the back door, and your guests come through the front door. So, people that know about the back door go directly there. And I think a lot of the times it's because the back door goes to the kitchen too. So, I mean, I love to eat. So maybe that's what, maybe that's what.
I love it. And so like what I try to ask everybody is, what is their rich state of mind? What's your big why as to why you're so passionate about what you do? You talked a little bit about, your experience, but you've continuously been helping, so many people. So what's your big why?
I'm a huge advocate for other people because I don't want to see them be harmed. My wife grew up very, very poor. And, my why is I want to be able to provide for my family like none other. I want to be able to provide and be the advocate for them when they did not have someone to be an advocate for them. And that's really why I do what I do, is because I absolutely love helping people. The old adage of David versus Goliath, that scenario really plays out in my life all the time because, not one person is going to be able to pull down the IRS, and that's not really our goal. Our goal is just to advocate for the client. It's not. I think the IRS is, it's an entity. It's amoral, meaning it's not bad. It's not good. But there's bad situations that happen to good people every day. And my goal is to just advocate for the people that don't know the rules. And my why goes back to, being able to provide for my family and being able to give that life to my family and the life to others that they don't know that they could have.
And that's beautiful. And, you're saving people's lives on a financial perspective and from a physical one, right? If we find ourselves all the way up to seizing properties and or in jail. So you're definitely changing lives in a different way that I'm pretty sure those guys and girls are definitely appreciative. How can people connect with you?
Yeah, definitely. So check us out at irstροublesolvers.com. That's irstροublesolvers.com or 877-4-IRS-LAW.
Awesome. Thank you so much, Ben, for your time. I've learned a lot as far as, because I personally, my wife and I, we're looking at buying a franchise, and I'm thinking about payroll and, the taxes coming out of that. So I'm thinking like, okay, cool. You know what? Let me not try to do this myself. I definitely need to outsource that. So thank you so much for that.
And one item there I didn't mention before, payroll penalties are the largest place where people make mistakes and the largest place where the penalties add up the fastest. Payroll penalties can add up to more than 63% of the payroll. So if it's not done right, so that's actually a huge number. So
yeah, that is huge.
That.
So thanks again, Ben. It's been great. Thank you.
Thanks for having me today.
Thank you for sticking with us from the start of the episode. Please share our show with friends and family, visit our YouTube channel, and view more of our content on richstateofmind.com. See you next week on the Rich State of Mind Show.